Hello, everyone, and a warm welcome to the program with me, Jerry Bambi. Now, the world is on the cusp of a recession brought about by the coronavirus pandemic. Nearly all sectors or industries are affected badly by the impact of this pandemic, and the jobs and the livelihoods of millions, if not billions, of peoples around the world are considered to be at grave risk, according to reports from several finance corporations. Over the last 5 years, though, in Africa, the dominant trend across the continent's largest tech ecosystems has been a record-breaking investment boom, from payments and e-commerce to health and renewable energy. Several fledgling startups have convinced backers of their long-term potential for growth and profits. Last year alone, startups on the continent reached near new heights, crossing the $2 billion mark, according to the State of Tech Innovation in Africa Arena 2020 report, as most forecasts suggested a continued uptick in funding. Now, all of this upward trend until COVID-19 struck. Startup Accelerator Africa Arena estimates total funding in African startups this year could drop by as much as $800 million or 40%, with a severe slowdown expected to become more visible in the next 2 quarters of the year. Now listen to this. The report's worst-case scenario also suggests the effects of the economic slowdown could last through 2021, with recovery only expected to come full circle by 2022. To put all of this all of this data simply, people will be affected. Who are they? How exactly might they be impacted? And what can be done to mitigate this? From Frankfurt with us this morning is Eric Young, co-founder of Green Tech Capital Partners. A warm welcome to the program, Eric. Eric, so the report is out there. African startups which were surfing on a positive momentum in recent years will be badly impacted by the aftermath of the corona pandemic. How do you see this, Eric?
The first thing to be afraid of now is the attractiveness of investment in Africa startups. Last year, there was an investment of more than $1.3 billion in tech startups in Africa. Because of this crisis, there may be a slowdown in investors who will want to see how it will go, and this slowdown plus containment will limit access to working capital that companies can use, which means that many businesses will end up with cash that will disappear very quickly because they have no advance. At the end of 3 to 4 months, they will lose their terms and will have to take again to close their companies. They will not be able to develop in the event of recovery of the economy, knowing that their team could go back to the informal sector to survive.
Eric, all of this surely doesn't sound appealing to any startupper. Most are by now already feeling the brunt, and it is clear that at the end of this COVID-19 crisis, the funding of startups may not be a priority. What can be the alternatives, though, so that the advances made in recent years are not reversed?
Today, the first alternative is to be able to respond efficiently and effectively to international development agencies that support the startup ecosystem. To do this, it is necessary to highlight and show more precisely the successful companies that have created jobs and that have had an impact on the economy. Because I think that even if today there is going to be a question about the proper use of the funds that have been released to support the startups, I think that it will, above all, have a question about the efficiency and the results that have been generated. It is therefore necessary to structure the response now and, above all, to propose alternatives that allow results to be much more visible and much more quickly. Today, there is no clear visibility on the number of employees who have been hired by startups. We know there are a large number, but this information is not really available, which makes it difficult to assess the impact of the financial support that has been done so far. So the last word could be to say that today we have the possibility of identifying the value that was created by the startups. We also have the possibility of taking financial action to allow them to get through this crisis and to maintain these jobs and to have to fight to create them. And we have the structure of accompaniment and support so that they are more resilient and so that at the end of this crisis, they can benefit from the opportunities that will arise.
Interesting. Now, Eric, what are the best practices for having successful startups in the likes of Flutterwave or SocoWatch?
For the case of Flutterwave and SocoWatch, they were able to raise very large sums which allowed them to have a little more visibility. For the other startups which do not have this possibility, they must be open to co-investment. The fact that they must look at the investor present on the market who can support them, provide them with the necessary financial support one another level. I think it is more important now that we develop collaboration between startups, that we develop joint ventures in order to be able to create structures with larger values that are much more attractive.
De création de valeur beaucoup plus grandes qui sont beaucoup plus attractives.